Hey, everybody. It is Chuck Barone on Wednesday, August the 21st, 2024. Crazy day, guys. You saw what happened today. I saw it in the chat here. Crazy times with these jobs numbers. Oh my God. And you know what's amazing to me also is just because of the weird time we're in here, the stock market actually rallied on this news. The bond market actually rallied. It's just the craziest stuff I ever saw. This market, it's all on rate cuts. Everything is factoring into these rate cuts, and I'm telling you guys right now, when they actually do it, when they actually cut the rates, it's going to be the biggest letdown in the history of finance. It's Rate cuts are not going to save the day for this economy. They're not, especially the pace the Fed seems to be wanting to do them, because I've been reading quite a bit about one and done. One and done. Well, why would they start cutting then in September? Risk the ire of Trump, who's going to be pissed off, already talking shit about the Fed like crazy, right? Um, so just the craziest times I've ever seen. Such a good chat here. You're right, Dave. These numbers, just embarrassing for the government. I don't know how they're going to hold their heads up looking at this stuff. But anyway, let me get into the show. Let me take a half a second before I get started, though. Of course, thank everybody for being here. Much appreciated, everybody. And thank you, as always, for your support. You guys mean the world to us, man. Especially you guys in the chat here, the everyday people. I can't tell you, you guys are the guys that keep this show going. All right, so let's talk about markets today. So we got some really important stuff today. This jobs number, just the jolt of it, right? And we also got Fed minutes today, which were interesting because they showed a little bit of not unanimity at the Fed. Some people thought they should have considered cutting rates back in July when they had their last meeting. So interesting stuff on the Fed minutes, interesting stuff on this jobs revisal. But let's talk about the markets today. So in spite of horrible friggin' news, the stock market rallies up. The Dow up 55 points, 40,890 on the Dow, great number. The NASDAQ rallies up 102 points, 17,918. The S&P rallies up 23 points, 5,620. All of these indexes nearing record levels. In spite, right? Bond market rallies as well. The yields coming down today. The 10-year falls 4 basis points, now sitting at 3.78%. The 2-year falls 6 basis points, sitting at 3.93%. So now we have yields coming down in the bond market. Of course, this is all in anticipation of these magical rate cuts that we're going to get. The bond market's been whipsawing all over the place. I think it's down almost 100 basis points or more from its peak. So these rate cuts, let's see, can they hold all of this stuff up? I seriously got my doubts about that. The dollar weakens again today, down 20 basis points, sitting at 101.17 on the index. Looks like it's on its way down to 100, and who knows where it goes from there. Rate cuts are not going to be good for the dollar. And I'm sorry, I'm a strong dollar guy. So when I see the dollar tanking like this, it makes me want to revise their plan a little bit to help the dollar not get crushed so bad. They apparently don't care. Metals today kind of had a weird mixed day, with gold falling just $2, but sitting at $2,512.50. I got to tell you guys, Barone's magazine has been the most bullish publication I've seen on gold. Talking more about it today, why gold's record prices are not, the top of this. I'm talking about government demand, talking about all the different variables that are going into why gold is up and keeps going up. Gold up almost 35% so far this year, beating the stock, beating everything. Best investment this year so far, gold. Silver rallies up 15 cents. Looks like it's going to make a run at $30, guys. It's $29.67. We know that's where the resistance number is. It's at $30. So silver needs to make a decisive move now, break past $30 and stay there for a while. then that 30, instead of becoming a resistance to break through, becomes a support number to bounce off of as it continues to climb up higher than $30. Oil today falls $1.21 per barrel, now at $71.96 for a barrel of West Texas Intermediate. It's exactly as we kind of thought it was going to be, guys. Gold is going to break records. Oil is not. Oil wants to be in that trough between 70 and 75, where it is comfortably kind of sitting now. I really believe it's going to be staying there for a while, unless something crazy happens in the Middle East, or there's, some outbreak of war, one of the oil producers gets into big trouble somewhere or another, or some catastrophic event happens. Oil prices are where they should be right about now, I think. Bitcoin rallies up today. Good job on Bitcoin today. Up $1,920, breaking well above 60,000, which was its resistance number. Now it's $61,215. Now Bitcoin has broken above the 60, which silver has not done with 30 yet. Now Bitcoin's job is to hold that number. Fight, fight, fight. Stay above 60,000. If it breaks down below 60, guys, the next support number is about 54 and then 52 after that. So we'll see. Bitcoin holds its own though, man. Doing a little better than silver right now. And I'm surprised. I got to say, I'm surprised silver has not rallied way more than it has. Gold's a great investment, but it's $2,500 to get in the game. Silver, I believe, is also a great investment. And for that same $2,500, you can get quite a bit of silver. Quite a bit of silver. So silver moves up just a little bit and you got 100 ounces. It's quite a different thing than it is your 1 ounce of gold, right? So silver surprising me and disappointing right now, but I'm sure as soon as I start to give up on it, the Barone indicator, that's when it'll break through and go crazy, 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 crazy. All right, so let's talk about the jobs thing today. All right, so we knew this revision was coming. We talked about it on the show for a little bit yesterday. Yesterday, they were estimating it like, okay, is it going to be between 400,000 and 1 million, which is a huge number, right? Big gap in there. Fell anywhere in there. Well, jobs are revised down by 818,000 jobs over the course of April 23 to March of 24. Okay, so pretty recent data. That's almost 75,000 jobs per month overstated. It's just it's embarrassing to the government. It makes everybody, like all the chat on here today, suspecting that the numbers are fake. They're intentionally putting out fake numbers. And I got to tell you guys, when you see a report like this, it's very difficult not to think that way, man. This is a colossal disaster, huge miss. And they're going to have to do something about this. They're going to have to come out and talk about this somewhere or another. Because people that follow the markets looking like I am going, what the frig, how is this possible? So it's going to be interesting because the Bureau of Labor Statistics is not one of the big government bureaus. Doesn't have somebody out front like somebody you would recognize very easily, a Kudlow or a Pete Buttigieg or whatever. So it's going to be interesting to see who they put out front to take the lashes for this, because heads are going to roll, guys. This is a disaster. So from April of 23 to March of 24, the U.S. averaged about 230,000 jobs per month growth. And that was the big topic, right? Everyone agreed. It showed the economy was still going strong. Jobs are holding up. Even though inflation sucked, rents were going up, people were losing their houses, everything was a disaster. They kept pointing to that jobs number and saying, look, jobs are still plentiful. Jobs are still plentiful. Interesting thing, because we got a little bit of a foreshadowing in that when they were talking about corporations not really hiring anymore, but not laying off either, right? Now that looks like that phase is gone too. And now it's not hiring and starting to lay off. So we're going to see higher unemployment. We're going to see this whole jobs thing, this whole facade they've built start to fall down. So yeah, they showed the economy. Well, let me ask you this. When you compare 155,000 jobs per month versus 230,000 jobs per month. That's a huge, huge, huge difference, and could have made so many different strategies happen in these markets. So really what they did basically was a massive, if this is intentional, and if they find out it is. If it's not intentional, you need to fire the whole department and start again, because this is like more than a simple error here. The interesting thing is, though, this is not the final revision, guys. This is not the final revision. They're going to revise it again in January of next year. So who knows where this number actually ends up, right? But I got to tell you, when you lose that 75,000 jobs a month, the numbers just don't look as solid as they were. Now, a lot was based on these numbers. Everything was trading strategies, the Fed strategy. They felt like the economy was going okay. They could hold off on cutting rates. I mean, just, guys, this is huge stuff, man. I can't tell you how big this stuff is, man. They blew up the whole market. They lied. The market now is completely skewed toward data that does not exist. And the amazing thing was the market didn't even start to correct about that today, because they're so focused on this chimera of rate cuts solving all of our problems. Now, the Bureau of Labor Statistics has some serious explaining to do. You've got some explaining to do, Lucy. The Fed funds futures now showing a 100% chance of a rate cut in September. I think we can all agree that's likely that it's going to happen. The only mystery now in September is how big a cut. Will it be a quarter point cut? Will it be a half point cut? Me personally, I've still got to say, this jobs report obviously makes it much, much easier for the Fed to cut rates. Because now they can point at the economy where they could point before and say the economy is strong. Now they can point at that same report and say the economy is not so strong. So it gives them the green light to start cutting rates, and cutting rates bigly if they want to. We'll see what they do. The Fed minutes came out today. That was also a very interesting report today, guys. The Fed minutes show that some members wanted rate cuts to start last month. There was some big talk about it, but the majority wanted to wait until September. They wanted to see a little bit more data. Well, now the data is a little bit screwed up. And even still, from now until September, when they have their meeting, the data needs to hold up until then. Now, what happens if CPI spikes? What happens then? What happens if any of these statistics that the Fed is following to make these decisions goes wrong? Now the Fed's in real deep doo-doo, guys, okay? Pointing to slowing inflation and rising unemployment to support cuts. So now it's amazing how they're using this jobs thing, right? So first they used the jobs report, the fake one, to point to the strong economy, to keep the consumer spending, keep the consumer borrowing. Now they point at that same data. They point at that same data and they say, look, the economy really isn't as strong as we thought. We need to start commencing with rate cuts. Guys, it is just freaking crazy, 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 crazy. Okay. Now we can clearly see by this report and everything else, all the other evidence we've seen, the economy is not exactly what we thought it was. There's some serious weakness in here, and we're going to see if these unemployment numbers get changed because of this. When you believe you're adding this many jobs and you're only adding this many, and you think you're adding this many, will that change the unemployment rate? The unemployment rate had been under 4 for a record number of months. Now at 4.3, what happens if unemployment really spikes? What will that do to the Fed's strategy? Guys, we live in really, really interesting times here, because now we're really into the unknown. The data completely unreliable. And, I guess you can point at the government, the Democrats or the Republicans. This happened on the Democrats' watch, so you can blame them. I'm not so sure that the White House was, dictating all of this stuff. I think you got this bureaucracy that maybe is so entrenched and so powerful, they feel like they can anticipate what the government wants them to do. They feel like maybe, okay, we need to have a good jobs number. Let's kind of puff it up a little bit. Now, I don't really think they expected to puff it up by as much as they did. Because basically, guys, let's say it like it is, man. This is close to 1/3. 1/3 of the jobs they say we created just vanished overnight. 1/3. Man, I got to say, if I wasn't seeing it, I would not believe it myself, man. To quote my friend Greg, you can't make this stuff up. It's just freaking crazy. And to wrap things up today, guys, the $5 footlong. I was reading an article about our friends at Subway. Funky, how you doing? Hey, Donna. Anyway, I like to say hi to the ladies. Anyway, guys, $5 footlong. Remember the Subway $5 footlong? Man, they were boom, 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 booming. People flocking. They were the number one franchise in the world. They were growing like crazy, 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 crazy. Guess what? The $5 footlong, depending on what you order, now going to run you about $15. Well, I don't know. Now that's a pretty big jump, right? That's 100%, and then another 100% on top of that. I got to say, I don't think you can blame all of that on the cost of goods. I don't really think bread, cheese went up that much where you have to triple your price to make a profit. So now Subway, like everybody else, that tried to raise their prices so high and got away with it for a short time. But now Subway, guess what they're doing, guys? Buy one, get one. So they basically now just cut that cost in half. So now instead of one sandwich for $5, well, you get two for 15. Okay, fair enough. It's a really encouraging sign to me, though, because if people were just going to be continuing to pay these outrageous prices, guess what? They would never lower them. The only thing that makes businesses move on price is the markets. If the market's rejecting the product, if their sales are falling, if their margins are falling, if things are falling, if their margins are falling, that makes them nervous. That's when they think about raising prices. But when everything's going down on their sales schedules, that's when you see price cuts start to come. That's when you see specials. That's when you see sales. We haven't seen that for a while, guys. Now it looks like with the consumer crapped out, with the consumer in debt up to his friggin' eyebrows, it looks like now common sense starting to kick in for consumers. They're not on the spree they've been on for the last few years. They're finally catching up to us, guys. What have I been telling you guys since day one? Very, very basic. A, try to save 10% of your income. B, invest your money conservatively and cautiously. C, don't add on new debt. Don't take on new debt. D, if you have existing debt, try your best to pay that debt down, pay that debt off. E, be a smart spender. Everybody has to spend money. We all have to buy stuff. We all have things we need and we want. Spend your money sharp. Do it like a smart person. Do it. Don't wait. Don't just go on impulse. Wait for the bargain. Do some shopping. Find the best deal. Get the things you want. Get the things you need. Just don't waste money doing it. Anyway, guys, that's it for the day. Tomorrow should be fascinating. Tomorrow we'll get on new unemployment claims tomorrow to fit into the mix of this. I'm sure we'll get more information about this big fuck up, excuse my French. And it's going to be fascinating times, guys. Great finish to the week coming up. We know we got tomorrow. We know we got Powell on Friday. Big doings going. I'll be here to bring you guys all the news you need. Back tomorrow, guys. Don't forget, thumbs up on the way out. Helps us out. Gets our video out there in front of a few more people. We need those views. Much love to all the people on the chat. Until tomorrow, everybody, take care. Thanks.